Afternoon, everyone. It's Chris from Social Safety R as well as Excel. You can find us on the website, Twitter, Instagram, Discord. And we are not a broker dealer. Our past performance doesn't give us any indication of our future results. Remember, use at your own risk, and data may not be copied unless requested from us. We trade the side market, up market, as well as down market. We have to keep an eye on the overall what the institutions are doing, especially the broker dealers, the big whales in the market, with Bitcoin, the stock exchange on the New York Stock Exchange, as well, inflation. Last but not least, the breadth of the market. Let's go to the first slide that I have up here. And what I wanted to do is talk about the overall, the different sectors in the S&P just generically and make people understand. I bracketed the weekly charts for 4 weeks on a 1 hour on the breadth of the New York Stock Exchange. And you're going to tell me, what is the breadth of the New York Stock Exchange? It actually represents what are the stocks that are moving on the exchange in a positive note or a negative note to give us an overall view if the sentiment is bullish or the sentiment is bearish. Whenever we are above 1,000, the sentiment is super bullish. Whenever we are below 1,000, the sentiment is more bearish. But when we are trading in the range of the zero line and the 700 or minus 700, we are range bound until we resolve to the upside or resolve to the downside. If you can see in the last 4 weeks, the sentiment was mixed between the high and low because people are thinking, hey, the holidays are here, we're going to get a Christmas rally, and so on. Some of the sectors got momentum in them. Some of them are sitting on the sideline, and we have to look at the defensive, the dividend, as well as the value in small cap in relationship to the S&P 500, which you can see the S&P 500, the 11 sectors are listed up the top, and I have the Mega 8. So if you noticed in the last 2 weeks, this is from Monday through Friday, and from Monday last week through Friday, the overall sentiment in the market was in the last 2 weeks down. We closed down except for one day, which was on Wednesday when the Feds were speaking about the inflation. So we have to keep an eye on for inflation. Can the stock market continue irrationally to the upside? Yes. Can the breadth tell us, hey, be careful, while the S&P and Nasdaq were grinding higher and the breadth and the RSI and the divergence in the S&P were coming lower. So we have to pay attention to that and be cautious if we get volatility in the market and the VIX pick itself up. Last but not least, you can check us out at the website once again, get in contact with us, give us your commentary, share it with your friends. Let's go to the first sector that I have up here. I put the New York Composite. This represents the overall the New York Composite, and I put some kind of a fan in there. That fan represent a fast moving average in relationship to the 34, the 50 simple moving average, 116, the 200, and the 250. Most institutions use the 200, 250, and the 50 SMA, and sometimes they use a fast one, which is around 20. We're a little bit different, but I wanted to show from 2022 highs till 2022 lows what the New York Composite has done. If I take the highs from here all the way down to here, we barely hit the 125%, 138%. If I get a measured move or Fibonacci to show you how it looks. So I'm going to draw from top to bottom. It doesn't matter which way I draw it. You can see you can draw it up or down, or I can draw vice versa from low to high. The negativity is going to show on the top, which showing me the 38.2, 138%. We are sitting just right above the 23.6 fib. This is a very important area that the New York Composite has to hold. I'm going to zoom in for 2 years just to show you the overall. This was consolidation in 2023. It did a W, and eventually we broke up in December. January, we retested the breakout and rallied up in 2024. We consolidated here like a W, retested that breakout here and rallied higher, but we are coming in. You can see that this candle here, see if I flash it, it shows you that the overall those fast moving averages, we have a little bit of divergence in the market coming back in, and my 34 SMA is meeting the backside of the breakout of this channel. My 18 should be about here. That's my 38, 34. That's my 50 simple moving average, and that's my 200, 116 simple moving average, 200 and 250. It does not mean that the market can go all the way down. In case we get consolidation, we find support around this area where this breakout, retesting this area and bouncing back up, that's great. If we continue higher, pay attention to it. But the New York Stock Exchange on the last 2 week candle, these two candles are almost engulfing this one. So I am paying attention in case we lose this candle and this one here coming back to this area before the bounce on the New York Stock Exchange. Let's take a look at XLK tech sector. I'm showing the weekly on purpose. This was the February 19 before the COVID, the rally in 2020, the 2021 all the way high 2022. They were talking about inflation and other things that were happening in the market, and we fell back down in this area, and we rallied back up to basically break out in the 2023. We just got a little push above that 177, 181, and we closed right here in 2024. We came back, retested the breakout, rallied, created like an inverted head and shoulder. You can see it, but that shoulder didn't fail, and we continued grinding higher. So on the XLK, the tech sector has been grinding slowly higher. You can see it here. Every time it touched the backside of this channel, we bounced off of the fast moving average. My 18 is around here, and my 34 simple moving average is back here at the 222. I am paying attention to the tech sector. Can the tech sector continue higher? Yes. But what I want everyone to know, from last year's Fibonacci, you can see the 2023 low to the high. We got the extensions to the upside. We are sitting at the 161 high. Where is that double top? If I zoom in here, you can see that 138, 139. We tested it. We're just closing right above it. Is there going to be continuation to the upside? Possibly. If there is weakness in the market and we lose that downtrend channel, we come back to the backside in this area where the breakout happened right here on those candles. Let's take a look at in the S&P sector, XLE, the energy sector. And the reason why I wanted to show this, if you can see, since the 2022, we consolidated, fell down, rallied up, came back in 2023. We were trying to make a cup and handle, you can see, and eventually we fell back down in the energy due to inflation. We have to pay attention to the dividend yielding accounts in relationship to inflation, as well as what the Feds and what the rates are going to be in the next month or so. Let's take a look at now. What I want to do is take a look at RSP. I'm doing the ETFs first. We can see that the value play equal weighted S&P 500. We can see that big rally in 2022. And 2023 wasn't inside the 2022 range. We couldn't break out until 2024. We retested it here in April. That breakout rallied up, created like a W, came back, retested it the fourth time, and rallied up. But right now, we're coming back to the backside of this channel. If I zoom in here, you can see that we are in an uptrend, have not lost this uptrend. I am paying attention to the value area high. I did not talk about the volume profile. You can see that the volume profile has a value area high. It's in yellow. Value area low is in the yellow at the bottom. And the point of control where most volume happened, or shares have happened, where they think that there is value, usually coming back to value area high, and the 50 SMA will act as support in case we end up coming back down. But is there going to be a Christmas rally? Possibly. Pay attention to that Christmas rally, because we can stay irrational to the upside without any retracement. But the breadth of the market, like I said, on the charts in the last 2 weeks, there was divergence and showing weakness at the lows. So let's go, Nate, take a look at the S&P 500. What I want to do is go to the SPX, and what I'll do from SPX, I'm going to break it down to the daily. You can see I put labels on it on purpose to just kind of give an overall view in our group, what the levels are in the prior year and so on. If I take the February from low from the high to the low in March 23rd till the 2021 highs, we came back in. If you can see, every time we came back, it took us 6 bars, which was only 6 weeks, 35% down. 40 bars in 2022, which was 27.5, and it was 40 bars, till October low. Then we rallied back up to consolidate where the December highs was a little bit shy of the 2022 highs. You can see it. We closed right in that area. We're just a little bit shy of the highs. Then in January, we rallied up and we continued higher, but we've been zigzagging in that open linear regression uptrend channel. You can see that cone every time, that cone, and you can see from the lows what I marked. You can see this marker here. I took that 4,108. I'm gonna bring it back a little tiny bit so everyone can see where you can see that this number, I haven't marked it, but I wanted to mark it to just to show you how many bars we've been going up. We have a 24.74% high. If I get a marker and I go to the highs of this year, I can just grab this pointer here to this high here. I just want to show the October how much percentage. We have 59 bars, which is 59 weeks, a 48.41% gain in the S&P 500. And if I take it from the January low, you can see this was the January low right here. If I take it from that January low to this high or this candle close, we have a 29.24% in the S&P 500 gain. Is it possibly that we can retrace back less? So let's go now to the daily. I'll do the NDX, then I'll go back on NDX. And I wanted to show that this has a lot of noise and information, just showing the double from low to high from the March 23rd till the 2021 highs before the 2022 reset. I marked it with a box. You can see this is another, we doubled the deviation higher, which was a 61.8 here. We came back in. I was expecting a higher shoulder and come back in, create a shoulder, head and shoulder. It created that shoulder, but never fell back down and continued higher. Can the market stay irrational to get 200% range of the 2021 highs all the way down to here and retrace back up 100% more higher? Yes. So if I take the January low of 2024 till this high, I want to just show everyone how much percentage we have gained. Let's just zoom in from here. I'm not going to take the October low here, because if I do the October or the November to this high close, you can see we did 54.93%, and that's 60 weeks continuation to the upside. If I take the January low of 2024 to the high right here, we done 50 bars, 50 weeks, and 34% in the Nasdaq. Can the Nasdaq continue higher? Yes. But now let's go back now to the daily chart. And what I wanted to do in the daily chart, just show you the range in the Nasdaq and the S&P 500 after the rally in January. We created a V shape, which was creating a head and shoulder, and then we continued higher, grinding from this area. So what I wanted to show you that the Nasdaq is a little bit stronger than the S&P. You can see this was what? Friday, Thursday, Wednesday, Tuesday. Monday was down, and Tuesday. Then Wednesday we rallied up after they had spoken, the Feds, and the announcement regarding interest rate. We came back in inside day on Thursday, and Friday we looked up and came back in to close right on the highs of the Wednesday bar. Is there going to be continued? You can see that we are in an open cone. That was the breakout that we mentioned here. Can we continue higher? Yes. So if I take the distance from here to here, or the distance from here to here, I'll mark it with a box so everyone can see what I'm trying to do. I'm going to do the longer range. You see this? If I duplicate this from the breakout, duplicate the drawing, I grab this drawing and I take this duplication. You can see the way that low is, and I duplicate it. This is 100% from that candle coming up, breaking out, and continuing. It retraced 100% of that move. Is there possibility of continuation? Yes. But if the market tends to change directional, I want people not to be biased and up trading to the right side. Let's go now take a look at the SPX, like I said. And what I wanted to do is show that weakness in it. We can see that the SPX, if I zoom in here, in the last week or so, we have that big gap here, which we never filled. You can see this high, this is the low. I marked it and I kept it there. We can extend it by using these boxes, edit the property. I'm going to extend it a little bit to the right side, and I'm going to put 20, the day as 20. So everyone can see where that gap is. And if I zoom in this area from the gap and this low before the gap here, if I just zoom in this area, you can see that this candle, this one, we came down, rallied up on Wednesday. What we are down, but you can see that the trend, if I just get a drawing downtrend channel until I break that downtrend, you can see we are consolidating in that range. You can see we are in a symmetrical triangle. I will get rid of that and I'll turn it off. So that fan is totally off. So you can see what I'm talking about. You can see that reset rallied up, continuation for a couple of weeks. We got to the highs here. We didn't make it to, we made it to the backside of that channel. When we fell down, we tried to rally back up to retake this candle on Wednesday. We tested that area, fell back inside and closed on a positive note from the prior week. But we, on Thursday, Friday, we fell back down. We tested the Thursday candle up to be positive. Then we fell back in and we closed right at the bottom of that Thursday candle low, but we retested the body of the close on Tuesday. If there's going to be continuation to the downside, because this was a gap that was filled here, is there another gap down here? Look at this. I wanted to show this. This is in the overnight action. This gap was actually filled by retesting and rallying, continuing hard for the next couple of weeks. You can see that gap was filled, no longer valid. So I'm going to take this off. So coming back to this area is a very important supportive area. If it doesn't go through, then we look for the bottom gap down here on the chart. So I'm going to remove this oval, no longer there. So everyone is aware of it. I want to show how I trade and tell you basically what I do on supply, demand, and gaps in the profile. Let's now go get the E-mini, which is the Nasdaq 100. We're going to get the micro ES, and we're going to see that in the micro ES, this is representing the Fortune 500 company, but some people cannot trade the E-mini. So this is the micro because I have a lot of lines on it. I wanted to show this, and I wanted to show where the volume profile is at the highs, where that consolidation, that third 21, we looked above it, came back, tested 24, tested 24, 50, 24 quarter, rallied up. This area is very important to me. If I'm going to come back, and I'm going to come back hard, I'll look for the value area high in the 116 to catch up to get a big buy zone here. If there's going to be continuation to the downside, I'm looking at the 18 to hold us up. If it doesn't, that's the 34.50 SMA. F3 is 38.2, F5 is 50, F6 is 61.8, 100% retracement back to the value area high, then the bounce. But if there's going to be a grind continuation higher, that is great. You can see in those sectors where Tesla is, where NVIDIA is, Netflix, Microsoft, Meta, as well as, you got Meta right there. Where is the other one? Meta, Alphabet, Google, Amazon, and Apple. So I want you to pay attention to those top 10 holdings in the XLK or the Nasdaq 100 or QQQ in relationship to the S&P 11 sectors here. Pay attention to the real estate, the energy, as well as XLP and the financial in the E-mini. So how do I draw the weekly range in the coming weeks? So what I'm going to do, go from daily, we're going to go to an intraday. From the intraday, we're going to do 10 days. We're going to go to at least a 4-hour or 6-hour chart, push OK. You can see that in this range, I talk about volume profile high and low. Do I trade inside the range, above the range, below the range, coming to it, rejecting or continuing to the upside, or do we come back to from the high, coming from the highs, bouncing off on the value area high and continuing higher? You have to ask about these things in order to learn it. The gray area is the overnight in the European Asian market. The dark area, which is in black, is the trading hours in the New York Stock Exchange from 9:30 East Coast till 4 o'clock for most equities, 4:15. But some equities trade 24 hours and some futures trade 24, but till 5 p.m. in the afternoon. The S&P, the Nasdaq, the Russell, and the Dow trade till 5 o'clock. Then they take a break and they reopen again. So this is why I have them marked in the overnight. If I take the overnight off, it'll show you the gaps in the charts. So was this week a range week? Yeah, this is the low for the week. You can see where the high was on Sunday. So if I want to go get a measuring tool, this is my measuring tool. I'll take the high for the week from here, not from up there. I'll take it from here all the way to the low that we had on Tuesday. This is the range for the week. And if I want to extend it to the right side, edit the property, what I'll do, I'll take it backwards, let's say 10 days or 15 days. That way everyone can see where those ranges are. If I zoom up to the upside or downside, I know where are my extensions to the downside are, where are my extensions to the upside are, and what are the ranges. If I do more than 10 days, let's say we do a 30-day range, now you're going to see the overall profile in the S&P 500 showing you that big rally, the reset, the rally up and the breakout. Rallying up, is this going to be the cup and the handle to continue lower to the backside of this channel for a bounce and the 116, or do we fall all the way the way that consolidation was before the breakout here, where we retested it here in the overnight and rallied higher? So this is what we got to pay attention to, the overall sentiment in the market. You can see that this gap here, that low that we had here to this high here, this overnight action is basically a gap. If I end up showing it on the charts, this is what I want everyone to mark. And this is the area that you want to do. Edit the property, mark it, and you can extend it to the right side. Let's say I want to go till 1219 and I extend it to the right side. This is the right. But if I want to change the property on it and change the color to put a little bit more lighter color and show where that gap is, this is the gap that you need to look for in case we fall back into that range. But I'm not being bearish, I'm not being bullish. I'm going to trade what's offered to me technically on the breath, the tick of the market, as well what the overall sentiment in the S&P or the Nasdaq is. So let's take a look at now the micro and that's what I will do today. And what I wanted to show you here in the micro NQ, this was the rally, the retest. This was the consolidation for about a week after the Thanksgiving holidays and stuff. You can see that consolidation and a big rally retest breakout. The Nasdaq broke that channel. This was the first channel that we had, remember everyone? Then we broke up because there was consolidation here and we were grinding sideways. So if I do a market just to show you how to do this, we get this high here. And once you break out of that range, it becomes what? Sentiment changes to the upside. So the distance I travel from this high to this low, can we basically reach it? Yes, we have. So if I take this high to this low, see, I'm going to duplicate it, duplicate the drawing just to show you how to do this. And I'm going to take this breakout right here to show you where it is. You can see it. I'm just going to mark it on the right side. There's your breakout. This was the breakout where it came. If I zoom it to the left, edit the property, and I take it back a couple of days backwards, I wanted to show you where it came from. So has the market 100% did that move up completed its move? Yes. Can we get duplication of 50% of this move higher? Yes. Can we come back 50% of that move? Yes. Or do we go 100% back to the bottom? Because we are in an open cone, but we are in an uptrend. So the sentiment in the overall, I'm going to get rid of those two, remove the drawing. What I want to do is get a channel on the uptrend. If I take this low here to this here, that's the major channel. We're going to, instead of making it regular, I'm going to just dot it out and I'm going to change the color to a little tiny purple. We're going to make it size 1 so everyone can see where the overall range can be in case we come back. This was the consolidation, this consolidation breakout. If it comes back here, that's a buy zone on the short term, but you have to trade on the long term, the sentiment to the long term. The short term, you trade the ranges with no bias. So let's take a look at the last 5-day range, and we're going to get a measuring tape as well. They call it measured move from high to low of the week. And I'm going to extend it to the right side. Let's edit the property. You can see it says 12:10. Let's make it till 11. That's fine. We zoom it back to the left. If I bring it back in, we can see where that low of that consolidation is, usually coming back to the 200 SMA between the -80 and -100 usually is a big buy zone. But the 50% for the institution are always looking at the 50 when they're trading on the short or the long, whether you're looking at the weekly, daily chart, they're looking where the 50% is on the Fibonacci's or measured moves to buy. Are we above or are we below? Usually you get a bounce there, or if in coming back to the zero line here in the 20, sometimes this will act as support before the bounce back up. And you can see the extensions to the upside and downside. I hope this video was very helpful. Once again, you can check us out at Solstice ATR and get in contact with us. And you can see what I did on the daily chart, showing you the E-mini micro where that breakout is. Even coming back to this area would be a very healthy area. But if I zoom in here, where's my value area high here? My point of control here on the long term, and my value area low to the bottom is on the annually way down there. But we are in an uptrend. We can see this major uptrend up. Can we continue to the backside of this channel here from this point to this point, coming to up here? Yes. But the most important thing I want people to understand, we're going to trade what we see, not what we think. And you can see on Friday, we looked up and we came back to close right on those candle. Is this sentiment still bullish? Possibly. If not, trade to the other side. If it breaks out, trade to the upside. So take care. Give us your commentary. Share it with your friend. Let us know what you think. Take care.